let's learn how to read charts. To do that, you first need to understand candlesticks as they are the foundation of the chart reading. Take a look at this picture. On the left, we have got a green candle and on the right, a red one. But what do they actually mean? A bullish green candle means the price is going up, more buyers are stepping in. A bearish red candle means the price is going down, sellers are in control. Simple, right? A stock moves up when more people buy it and goes down when more people sell it. Now let's focus on the green bullish candlestick. It opens at the bottom of the body. The wick, that thin black line, shows the highest and the lowest price of the session. At first, seller pushed the price down, making a low. But then buyers jumped in and pushed the price up, overpowering the sellers. The candle closes above the opening price, meaning buyers won. That's why it's a bullish candle. Now, what about the red bearish candlestick? It opens at the top of the body. The wick shows the highest and the lowest prices. Buyers tried to push the price up, making a high. Then sellers took control and drove the price down. The candle closes below the opening price, meaning sellers dominated this round. That's why it's a bearish candle. So, in simple terms, a green candle means buyers had more power and pushed the price higher. A red candle means sellers had the upper hand, forcing the price lower. You can't trade based on candlesticks. They are just one part of the puzzle. To trade effectively, you need a strategy that includes candlestick patterns and other key factors. Don't worry, we will get into that later in this video. Now, let's break down some key candlestick patterns. Candlesticks aren't just a random shape. They show the battle between buyers and sellers. Understanding them is a game changer for trading. Let's go through them one by one. So first is hammer candle. Ever seen a candle with a small body on top and a long wick below? That's a hammer candle. Here's what happens. The price opened near the high. Seller pushed the price down aggressively. But then buyers fight back hard and push the price back up. The candle closes near or above the opening price, forming a long lower wick. What does it mean? Buyers won the battle. This could signal a trend reversal to the upside. Now it's an inverted hammer. This one looks like an upside down hammer. Here how it forms. The price opened near the low. Buyers push the price up, but sellers fight back and drag it down before closing. The candle closes near the open, leaving a long upper wick. What does it mean? Buyers try to take control. If they gain more strength, the price could break out higher. Next is shaved bottom. Imagine a candle with no lower wick. This is shaved bottom candle. Buyers dominate right from the start. Sellers try to resist but they fail. The candle closes at its highest point without a lower wick. What does it mean? Strong buying momentum. The price may continue rising. The next is shaved head. Now let's flip that around. This is a shaved head candle, meaning no upper wick. The price opened at the highest point. Sellers take control immediately and push the price lower. Buyers try to fight back but fail. The candle closes at the lowest point. It means sellers are in full control. The price could keep falling. Now the next candle is gravestone candle. This one looks like a gravestone and that's not a good sign for buyers. Here's how it forms. The price opened near the low. Buyers push the price up, but then sellers completely take over and slam the price back down. The candle closes near the open, leaving a long upper wick. It means sellers won the fight and the price may drop further. Now, the brick green candle. This is a powerhouse of bullish momentum. Here's what happened. The price opens at the lowest point. Buyers dominate, pushing the price up continuously. The candle closes at its highest point with little to no wick. What does it mean? The market is very strong and the price may keep going up. So our next candle is dragonfly candle. A dragonfly candle has a long lower wick and a tiny or non-existent upper wick. Seller pushed the price down early, but buyers come back strong and push it all the way up. The candle closes near the open price. What does it mean? Buyers took control and the price could rise. Now, doji candle. The doji candle looks like a cross. The open and the close price are nearly the same. Buyers push up, sellers push down. Both sides struggle, but no one wins. The candle closes near the open, forming wicks on both sides. It means the market is indecisive. It could go either way, so wait for the confirmation. Our next candle is spinning top. This candle looks like a spinning top because it has equal size wick on both sides. Buyers and sellers pushed in both directions, neither side take full control. The candle closes near the open, forming wicks on both sides. It means the market is undecided. We need to wait for a clear signal before making a move. The next one is the red big candle. This is opposite of big green candle, full bearish power. The price opened at its highest point. Seller dominate, pushing the price lower. The candle closes at its lower point with little to no wicks. It means the market is very weak and the price may keep dropping. So these are the few candlestick patterns which I have explained you. Now that you understand these candlesticks pattern, you are one step closer to reading charts like a pro. But remember, candlesticks alone aren't enough. You need to combine them with other trading strategies for the best results.